Okay, this is experimental. Not saying I'm always going to trade this way. I'm hedging between two micro instruments, the MES, which is the micro for the ES, and the MNQ, which is the micro for the NASDAQ. We entered two long micros for the MNQ, and we're short 3 micros for the MES, and we're looking for a divergence. When there is a high enough divergence to come in, we're going to take the profit off the table. All right, so that's the both positions. We need one to go more profitable than the other one is losing, that creating a net profit overall for both sides. All right, and so it's interesting because you take your, we're slowly trying to inch our way up here with to get to $53,000. $53,000 will pass the accounts. These two have been passed and reset back to the original 50. These are waiting to renew, and these are on their way to being passed. Well, so what I do is I take the bottom two and I hedge them against each other, and we keep doing that with the bottom two, trying to push these up to the $53,000 mark. Now, I don't know if Apex is going to like this strategy. I don't even know if it's going to be successful. I'm not even sure if it's worth doing professionally. I'm just experimenting. Like I said, I'm trying to learn and to see how things go. All right. Having said all that, you cannot, what shall we say, you cannot DCA dollar cost average with this technique, adding to a losing trade. What you have to understand is that with multiple accounts, the overall balance of all the accounts needs to keep growing. So right now I have 3 personal accounts, small personal accounts, where I can't lose, like $2,500 in each one. And if I were to hedge those accounts and take a loss of $500 in one and a gain of $550 in another, my overall balance in all 3 accounts have gone up $50. Even though I lost in one, I gained more in the other. That's the idea here too. I'm not sure if Apex is going to like this kind of trading. I know they don't like dollar cost averaging, but as long as we just don't blow the accounts and have a stop limit, say we have a $500 stop limit or a $1,000 stop limit, and we're not adding to a losing trade, we get out when we're supposed to, I think it'll be okay. They don't want us to just blow accounts just to blow them, right? And so that's what they're going to be looking for. As far as hedging, I don't think that's a problem. That's not a problem unless you're hedging the same exact instrument. You can't hedge the MES against the MES. It has to be a completely different instrument. So anyway, so like right now, let's take a look at this. Right now, if this keeps going, if this gets to 200, 210, and this stays relatively spaced away from it, close both sides and take whatever profit you have, $30 to $50. And that's just for one account each. If we were copy pasting multiple accounts, then you multiply that by however many accounts you're copy pasting. Again, the goal is not to dollar cost average. The goal is not to blow the accounts. The goal is to use risk management, have a stop loss, close both sides, whether it's a win or a loss, when you hit that stop loss, or take profit when you feel like that has happened. Okay, so yeah, well, basically what you'll do is you'll stop out of the trade if it were to hit your stop loss. For instance, if this were to go to $500 down, minus 500, that's my stop loss on any trade. Then no matter where this green one is, hopefully if we lost 500 on this, we want to gain at least 500 plus 1. We got to cover commissions, of course, but you see my point. You don't want to really lose more than you're gaining. So wherever this stop loss is, if it's 500, by the time I close both positions, I want my gain to be more, 520, say. So we're definitely making money and covering the cost of commissions. This is experimental. I'm trying to see what happens. And again, it's all, I'm trying to figure out how many positions do I need on each side to make that work, because having one on each side, you have more of a divergence. I have 3 over here to short. The MES does not move as much or as fast. So I have 3 to short on the MES. And over here, I have 2 that I'm long on the MNQ. Okay, so I'll let you know how this particular trade goes, and we'll see if it's profitable today or not. Okay, just to show you what's going on here, there's enough of a divergence, almost $20 here, where I can show you what's going on if I just close the position. So close and close. Let's take a look at the results, and you can see what we got here. All right, so slippage, commissions. I just wanted to prove and show myself and keep observing daily that as long as it's more than the loss, then it's going to benefit all the accounts, because in real money, with real money, if I were to do this with my real accounts, my personal accounts, and from what I understand, I can set up as many as I want. I can do this with my own money, and I don't need to have Apex necessarily. So I am going to be experimenting with this, because if this is a viable strategy, then I might try to do this. But anyway, this is not very much profit. Okay, $12. That's not very much profit. If this can be consistently done, and I copy paste 5 accounts on each side, then all of a sudden, it's multiplied many times over. So anyway, this is a very low. I mean, I've done a lot more than this before with profit. It can also turn against us in terms of this could, when it's time to hit that stop loss. You see how it's down 177 here. If it were to go down to 500 and this is only up 450, then I'm going to lose $50 on that day, because I just didn't make as much as I lost. And that's a losing trade. And that's part of trading. You will have losing trades. This is not a foolproof plan. This is not a guarantee. This is risky. It's just another way of trading that I'm trying to work out and understand and see if it's worth it. So I'm going to get back in a trade and see how the rest of the day goes. But I just wanted to close this video out and show that that's the idea behind the hedging of the micros. What I've done is I just got right back in the same trade, short 3, long 2. And already the divergence is against me. I didn't trade with any consideration of getting in at any particular price, other than I just want to hedge. So if I were to close right now, I would actually lose, because I'm losing more than I'm gaining on the short. So let's see how it goes and develops. And the idea isn't just to blindly do this. The idea is to figure out support levels, resistance levels, trading confluences, ICT strategies, whatever you use to trade with, moving averages, trend lines, Fibonacci's, and so on. Bottom of a channel, go long. This is a good area to go long right here. Okay, in my opinion, this area down here at this trend line coming down right here but I'm going to also hedge to go short in case it keeps going. So you don't just blindly do it. And remember, if it goes against us, we have a stop loss for that particular account. Get out, but the other account happens to profit, right? So it's a hedging technique. You still trade basically the same way you normally do with your strategy in terms of trend line breaks and risk management, except you're putting on a hedge position with the other instrument in a different account. Okay, so let's see how this turns. And I can see why people don't like to hedge, because it does not move perfectly. I mean, we're down 155 on this one, and we're only up like 35 over here. That's a huge difference. Now, if that was profit, I would take it. I would take that right there. But it's a loss, so I'm just going to ride it out, and hopefully it won't hit my maximum stop loss. Now we can see here that they're both in the red, which is interesting. We've got to always pay attention. Down 73 on that one, and down 172 on this one. And that's interesting. As we experiment and learn about this, we've got to be able to face every situation that arises. And that's what happens to become a better trader. You have to really put some screen time in, experimentation time, and really develop, because of all of the practice and all of the different scenarios that arise in trading. Experience and time will make us better as we learn from every possible situation that might arise. So I'm still going to keep an eye on this. Okay, now we see this nice intense move up here. Let's see how far it goes. Oh, we did sell one up there, and now I'm only long 2 on the right side. Let's see how it goes. Okay, we're trying to add on this breakout. Let's see what happens here. Okay, let's take a look at what happened here. I added to the position when it looked like one was going higher than the other. Overall, we're up almost $500 on this account. This account, which was at the bottom, has rolled up to number 1 position now, which is kind of what I want to do. I want to take whatever two on the bottom that I'm hedging against one another. I want one of these to get up to the top, and that's what happened today. The two that I had, this one shot up here to number 1, and this one has stayed on the bottom. Okay, well, actually, it's right here. We're still above the 50,000 mark. You know, we don't want to just blow the account, and the balance is still in our favor. 498 versus 478. That's a $20 balance. Plus, we're closer on the one account, getting closer to 53,000 and passing that particular account. Okay, that's enough for today. I will be experimenting and practicing, and we'll see you on the next video. Like I said, this may not be the way I'm trading. I'm probably not. I'm just experimenting. I'm interested in how this works, but we'll keep an eye on the technique and see if it's worth anything.